We usually say that trend is our friend, but it is not as simple as looks like a friend. When I started my career, I was so happy that we are having so many time frames, something like 5 minutes, 10 minutes. We do have the daily time frame, we do have the monthly time frame. So, and apart from that, so many stocks are there to enter and exit. And my mindset was, if I will do all of those 5 minutes, 10 minutes, 15 minutes, all those time frames, and if I'll get one jackpot call, which might help me to grow my capital to 10 times easily. When I checked 5 minutes time frame, it was looking super bullish. But when I go to 1 day time frame, I was shocked. I can see the super downtrend and bearish movement over there. So this was the first experience while trading the trend. The experience was when I was looking the 5 minutes candle, I was seeing the uptrend, and when I go to 1 day time frame, I can see the downtrend. So should I buy? Should I sell? I was completely confused, and I was really confused for a very long period of time, whether we should do multi time frame analysis or not. Today, this is the video where I will be explaining about all of those in details so that you don't get confused. So the first and foremost thing what we have to understand is trend is always relative. It all depends upon the time frame you are looking at. Let me open the chart and show you what I am talking about. And if you see here, when I am looking into 1 day chart, it is completely downtrend, right? If you will see the chart, like it has been coming down from 680 level to 100 level. So 1 day chart is completely downtrend. But when I'll go to 5 minutes candle and try to see what is happening, okay? So if I'll just look into this, what is happening? We can see the completely different picture altogether. That means currently when I'm using 5 minutes time frame, I am seeing the super bullishness in this particular stock. But when I go to 1 day time frame, which I have already shown, right? So what is happening? I don't see the bullishness in the market. Rather than that, it is completely bearishness. And as I told, the price has come down from 700 to 100 in just a small time frame, right? So can you see there is some discrepancies? But honestly, there is no discrepancy at all. It all boils down to the time frame which you are looking at. Many times people ask me this question that I want to buy stock. Is it right time? That's where the problem is. They don't know which stock they want to buy, whether how long they want to hold, whether they want to hold it for intraday, whether we want to go for short term, long term, or mid term. So that's the reason why whenever you want to enter into any of the position, you first thing what you have to do is you must define your trading time frame. Something like if you want to hold any of the position for longer period of time, maybe for 5 years or 10 years down the line, so in that case you might go for the weekly and monthly candle. But if you just want to do some sort of swing sort of trading, in that case you can go for the daily time frame. And if you want to do some sort of intraday trading, in that case it is preferable to go for the 5 minutes, 10 minutes or 15 minutes candle. If you try to understand, let me open the chart of some sort of stock, and we will do the multi time frame analysis and figure out what sort of view we will be getting. Okay, so let me open the chart of, so I have opened the chart of RBL Bank. Now if I go to daily time frame and see what is the current trend looks like, it is completely looking like a downtrend. If you see, the stock has fallen from 600 to 100 in such a less span of time. Whenever you want to enter into any of the position, the first and number one thing what you have to do is you have to define your time frame. Okay, so this is one of those very, very important things which we have to understand before entering into any of the position. So here's the thing, right? If you are a long-term trader or a short-term trader, then your defining of the time frame will be more than 1 day time frame. But if you are an intraday trader, in that case, your time frame will be looking at 5, 10 or 15 minutes. So if you're a long-term trader, this 5 minutes, 10 minutes, 30 minutes, 1 hour, 4 hour time frame are irrelevant to you. It is a noise for you, right? Because these are part of your trading time frame. Only 1 hour, 1 day, 1 week or 1 month is the time frame where you should target if you are a long-term trader. So if you are an intraday trader, you have to watch this 5 minutes, 10 minutes or 15 minutes candle. So the time frame of 1 month, 1 year are really, really irrelevant to you. because the long time frame is none of your concern, and the time frame is so far away, right? You might have entered and exit many times till the time the long term trend is being changed if you are intraday trader. So the first lesson which you have learned till now is your trend is always relative. And the second thing what you have to understand is you have to define your trading time frame always before entering into any of the position. So it is something like, you can go to maximum one time frame higher. It is something like if you are watching 1 day time frame candles, in that case at least you can go till 1 week. You should not go for 1 month and 1 year. So one up is more than enough. By the way, if you are liking this video, please give me a thumbs up and subscribe to this channel, because we will be posting so many good content in this particular channel. And if you're not liking, then please subscribe to the channel. Anyways, I'll talk about the stock market. Let's talk about the new the fourth topic which we want to discuss is called overall market trend. Now you have to understand the overall market trend first. We will be talking more about the top-down approach while going through, but you have to understand this first. Something like, market runs in a cycle. Similar to the season, what happens? We usually have the spring season, we have summer, fall, and winter. Similarly, market is having 4 stages, right? So I will be showing you all of those stages. So it is something like similar to the seasons. This market always have 4 stages. Let me talk about those stages. So it is something like, let's think that the stock was moving in a range for a very long period of time, and we got the breakout from here, and thereafter the stock has gone too much up in very less span of time, and then again it did some sort of time pass over there, and again we got the breakdown, and after reaching here again it is doing some sort of sideways movement. So this is the way how the market cycle looks like. So if you observe closely what happened, the first place where market was spending a lot of time at that particular price, this sort of situation are called nothing but the accumulation stage. So accumulation is the stage where many people will be trying to accumulate that particular stock. Now after accumulation stage, as soon as the accumulation stage is over, we usually find the breakout and the sharp up move in the stock, and post that we usually see some sort of equilibrium over there. These stages are called distribution stage, and as soon as we usually get the breakdown, we will be seeing a sharp downside movement. So please try to understand, the number one is accumulation, where the people are trying to accumulate that particular stock. The second stage is the trending phase, which is where the stock will have bigger movement, and later on time we might see the distribution stage from where the stock will be falling down. Please try to understand, market doesn't move randomly. It has got some sort of flow to it. Now let's move ahead and talk about some of the other topic called swing points. Now before jumping into the swing point, let me show you how the stock typically moves. Okay, so now the stock might be moving like this, then again maybe will move like this. Let's think that the stock is moving in this way. Now please try to understand how to find the swing points. Okay, so as I told, let's take the example of any of the stock. Now whenever you will have a glance of the chart, the point which stick to your eyes are called swing points. In this chart, if you try to observe, this is some of the place, this is one of the place, then this is one of the place, then this is one of the place, and wherever your eyes are getting stuck, so these are the point which are called swing points. In this example, if you see the Tata Motors chart, okay, so automatically you will be able to figure out these are some sort of the places which are sticking to the eyes. Okay, so if you see here, these are the some of the points. Okay, so these are some of the points. Now these points are called the swing points. Next point is nothing but the LOC. Now what does this LOC means? LOC means line of control. So similar to the border, if you are having different countries, they will have some sort of borders, and we should not cross that particular line, right? So similarly here also, whenever you are doing any sort of trading, you must know where is your line of control. So in this particular chart, as we discussed about a little bit earlier, in that case, let's think that stock is moving in this direction. Stock is moving in this way, which is completely upside, and all of a sudden you saw that it started forming this sort of place. Okay, so my point is, whenever the stock is in uptrend, okay, and you are able to find some place where the previous swing is breaking down, that is the time and that is the point where we have to be very careful, and that is the time which is called the line of control, and that is the place where we should try to exit from the position. So this is one of the things which every trader and investor must know. Now let's move to the next. Have some predefined number of bars and candles in your chart. I usually have 600 to 900 bars in my chart. So I'm very sure that you will be agreeing with me that if I am having 20 bars in my chart, and when we see it and compare it with 300 or 400 bars in the chart, it will give the completely different message altogether. So 300 bars will give you the big picture of it, and another one is giving just a small picture of it if you are just looking into the 20 candles in a chart. So my suggestion will be to have at least 600 candles or bar in the chart. So after defining the time frame, then defining the number of bars, it is very, very important to understand the way how it looks like. So I have opened the chart of Nifty 50 in front of you. Now please try to understand the current behavior, how the stock is moving is it is moving in this way, where it is going up down up down up down, little bit of down and up. So if you observe closely what is happening, it looks like a range bound, but when I will just zoom out the chart, it will give me the complete different picture altogether, where the current trend of the market is very simple. It is a bullish momentum which we are having. Are you getting my point? So that is the reason why how many candles and how many bars are there in the chart are very, very important to know, because this line of defense, if you want to get it, it is based on the higher high and lower low. So if you don't have the correct number of candles or the bars in your chart, it would be very, very difficult for you to understand how you are doing the analysis. I have opened the chart of Hero MotoCorp. If you will look into closely what was happening, this is a swing, one of the swing high. These are swings which are there. Okay, then low. Now please try to understand, this is one of the low. Now when you observe closely what was happening earlier, the stock was making your lower high, lower low, lower high, lower low, and suddenly we saw that it started moving in terms of your higher high and higher low. So this is the place where you should know that the stock had changed the direction from the downtrend to uptrend. When the previous one, it was making lower high, lower low, suddenly you see that there is some sort of way where we are able to figure out that stock had started forming the higher high and higher lows, right? So these are some of those small tricks which is used to understand the current trend of the market. Keep on forming the higher high, higher lows, higher high, low, higher lows, higher lows. Now if you are holding this particular stock, where you should exit your position, so your exit should be at the place where the previous lower high is getting broken. So if something like if stock will come down and breaking down from here, so this is the point where you should exit your position, because of the very simple thing that it will start from the lower high and lower low, which is one of the type of downtrend, right? So this is one of the very, very important thing which we have to understand. Now the next thing what you have to do is you have to look at the price action. Just need to see if it is making the higher high, higher low, or it is making the lower high, lower low. So if you see, let me open the chart of Nifty 50. If I open the chart of Nifty 50, at this point, the currently Nifty is at 17,956. So if you are buying Nifty 50, then you are taking a big risk. So please try to understand what risk I'm talking about. So at this particular point, if you will buy this particular Nifty, you are having a big risk or downside thing, because your previous support was at 15,200 points. Now, why I am taking? Because if you wanted to buy at this particular point, or at this particular point when there was a breakout, it was completely fine. But currently, please try to understand, Nifty is having some other hurdle, something like this is hurdle number 1, this is hurdle number 2, this is hurdle number 3. So there are 3 major hurdles which are available. So if suppose Nifty will break out from this particular point, and thereafter when it will do the retest, that is the point when you should enter into the position. But if you are trying to enter into the position now, because there are so many obstacles over there, as I told, this is one of the resistance, this is one of the resistance, this is one of the resistance, where it would be very difficult for us to do it. But if you will try to enter over here, we might not have the obstacle on the top, the movement will be more smooth. Chart doesn't make sense to you, just ignore it. So it is something like when you are looking into the chart, and if you are having the love at first sight, then that is the chart which you should try to trade or invest. Because in case if you got some stock, and those charts are not making sense to you, whether to buy the stock or sell the stock, then there is no point following yourself to that particular stock. The pattern of that particular stock you are not able to understand, right? You have got remaining 5,000 stocks in BSE and NSE. Trade only the stock which you are able to understand. The framework which I am sharing now is one of the way to look into the stock, but trust me, there will be some point when there will be so many stocks where you are not able to get sense out of those stocks. So my suggestion will be, so let me recap the things. We have discussed about the trend is our friend until it bends. The second thing which you talked about is trend is always relative. That means you 5-minute picture might not be same as 1 day or maybe 1 month picture. You must define the time frame always before entering into any of the position. The overall market trend you must know before entering into any of the position. Then we talked about the swing point, how to figure out which swing points are better. Then we talked about the LOC. LOC means line of control. It is the last point till which you have to wait in your position. The next thing which you talked about is how many number of candles should be there in your chart, and we talked about some sort of price action thing. So these are the steps to find the trend. Number 1 will be to define your trading time frame. Number 2 will be to have the fixed number of candles within the chart which you are able to see. Okay, so you should not keep on changing the number of bars or candles. Number 3 will be to look at the price action to find the trend. So if you like the concept, then please give me a thumbs up, and by liking this particular video. If you haven't joined my community yet, I am inviting you to my free webinar. Link should be there in the description section.